What's up everyone, Dylan here. I wanted to hop on and do another episode of the weekly analysis video. In this week's video, I'm going to be going over overall market context, both bullish and bearish context that we've been seeing over the last week or so. And I'm also going to talk about some of the upcoming plays that I plan on taking, including the SMH put play that I mentioned on the last video that I did. So with that said, we'll hop right into it. So to start off this video, I'm going to be going over some of the bullish context that we have been seeing, okay? I'm going to start off looking at the VIX Futures, okay? The VIX Futures are a massive part of my system, okay? I talk about it all the time in the Discord, and I'm going to kind of give you a brief piece of context that is very, very helpful in regards to knowing when the sell-off in the S&P is going to continue. Okay, so in the Discord, I posted on Thursday, if VIX is unable to break above 14.35 and hold, ES will have more of an ability to be bought on dips below 5,072, right there, okay? So essentially, very, very simply put, the higher the VIX goes, the more pressure gets put on the S&P. So when the VIX is very subdued and it lacks upside continuation, the S&P 500 futures will not continue to the downside. Because if you see, the S&P has sold off a few times this year, right? We had a late December decline with a decline right there, with a decline right there, right there, okay? However, these declines are not being met with continuation. They're only lasting a few days at most, and then they get they get bought right back up, okay? So for the S&P to decline in a continuous manner, you need to see the VIX extend to the upside and continue to the upside, okay? So I highlighted this 14.35 level. You could see 14.35 over here where my cursor is. The reason that level stood out is because it was a previous all-time low. Not only was it a previous all-time low, but it also marked the bottom before a move up to the 17 area. Okay, so at that point, we can see that that level was strong because it had the ability to, push price all the way up to 17. Okay, and then since then it's been on a continuous decline, and as a result, because the VIX is heading lower, the S&P has been moving higher. Okay, so 14.35 was the level in focus. Okay, if I go to a 1 hour chart, you could see ever since VIX broke below that 14.35, which was at one point the all-time low on the March contract, ever since then it has not been able to sustain value above. Every single candle test on the 1 hour chart, and I believe the 30-minute chart as well, has not been able to close above. As a result, dips in the market continue to get bought. Okay, so like I said on Thursday, I said if VIX is unable to break above 14.35 and hold, ES will have more of an ability to be bought on dips below 5,072. If I go to 5,072 on the S&P, you could see right here, 5,072, you could see there was very little pressure to the downside below 5,072, right? Every single time S&P got below 5,072, it was short-lived in combination with the VIX failing at 14.35, and as a result, the market was able to move to the upside. Also, TNX, we went over this on last week's video, right? TNX had that range between 4.35 and 4.25, right? This is the 10-year Treasury note yield. I said last video, if TNX can break to the upside above 4.35 and sustain value above and move higher beyond that point, it would act as a headwind for the stock market. In other words, it would put pressure on the market and potentially lead to a downside move in the S&P 500 and the other indices. However, it broke below that 4.25. Not only did it break below, but it also retested. Okay, so you saw a breakdown below on Thursday. I believe that was one day after I posted the video. And then not only did it break down, but it also retested below the 50% retracement. Okay, so when I look at retests, I like to use the fib to kind of gauge, how far it moves on the retest. So essentially, if you're a bear and you see a breakdown occur, you do not want the retest getting back above the 50% retracement in a consolidation range. Okay, so as long as that retest stays below 50% inside of the consolidation, for me, I view that as a successful retest, okay, in terms of it failing there. So that's exactly what you saw. The retest failed below the 50% retracement inside of the consolidation, and it headed lower, okay? So now, if this continues lower, right, it continues to go down, and it doesn't have to be in a straight line. It could look something like this, right? It could, kind of take its time to go down. This will continue, it should continue to be a tailwind for stocks and kind of give it a natural bid. However, if it goes to the upside, and this is very data dependent, okay? The movement in TNX will be dependent on how the data comes out in terms of inflation readings. Okay, so tomorrow it could look terrible, and then the next day it could freaking rip, right? Or vice versa, depending on the data. Okay, so if you do see this breakdown fail and it starts to move back higher, that would then become a headwind for the stock market. Okay, so so far the VIX bleeding and TNX breaking down are giving the overall stock market a natural bid, and which is helping the S&P and the NASDAQ move higher. Okay, now going back to the VIX, something interesting that someone in the Discord pointed out was the fact that it has been respecting a trendline support level. So if we mark this low and then we mark all these other lows, right? We can move that up higher. Let's try that again. Okay, you could see that each time it gets to this white support line, right? 1 test, 2 tests, 3, 4, 5, almost 6, 7, 8, right? There's been 8 daily tests at that white trend line support, and we have not seen a daily close below there. So if the VIX starts to find support as it did on Friday and move higher, that would put more pressure on the S&P, and ultimately it should create downside pressure, okay, as long as it continues to the upside, especially above 14.35 on the March contract, okay? So this could be a support level, as we've seen in the past numerous times. So definitely keep an eye on that trend line as well as that 14.35 level, okay? So that's that, okay? Now, I want to talk about some bearish context, okay? Actually, I have one more bullish piece of context, as well as a potential trade that I'm looking to take. So, the Russell, right? Russell represents smaller cap names, okay? Russell 2000 Index Futures, RTY. It has this key level that it rejected at in February of 2023, and then it double topped there again in December of 2023. So now it's coming up there for a third time, after a few months, okay? If RTY breaks above there and holds and kind of bases above and, accumulates for its next move higher, that can be yet again another tailwind for the overall market, because that will kind of take some of the pressure off of the names that have been carrying the overall market, such as the AI names, and it kind of gives the market breadth more of a flexible standing in terms of there are other sectors that will also be helping the market move higher. Okay, now if the Russell breaks out above 2089, this is a trade that I am looking to take. We're going to GameStop. Okay, GameStop, a lot of people look at this and probably laugh and say, oh, GameStop, that's a meme stock. What is this guy thinking? But it has a very good looking trend line that it has yet to break. Okay, so this trend line started back in November of 2021. It's got 1, 2, 3 tests, almost 4, and now it's back there now. So if Russell breaks above that level that I just went over, that might give GameStop and other small cap names some a natural inflow to break out to the upside. I think this is a very good risk reward play, because even if you use this previous low as a stop loss, let's just say you use 13 as a stop loss, you're risking $2 to make 5 plus. Okay, so the risk reward there is pretty favorable, right? And you're seeing other small cap names like this one breaking out as well. So like Viking Therapeutics, right? Some of the other small cap names have been breaking out over the last few weeks. So it's kind of like a domino effect. So if you have the Russell 2000 breaking out as well as GameStop, it can kind of create a full sector rotation upside move. Okay, so GameStop, if that does break out above like 15, or you could even play it safer and use those two previous highs to break out 15.25, I will personally be taking shares. Like I said, the risk reward is very favorable, so that is something that I'm looking at going forward. Talking about bearish right now, we are flipping into the bearish context in the market. Okay, I still haven't excuse me, I still haven't chased the majority of the move higher. Right, my timing is off. I'm not stubborn and shorting every single pop, right? I've only shorted one time this year in 2024 as I've gone over. But the bearish news or bearish context are still out there, and we're going to go over a few more of those, as well as the SMH trade that I do still want to take. I have not gotten into it yet, but I'll go over that as well. So ES, we have a trend line coming up that definitely want to look at. Go to a daily chart. Where are we? ES is coming up to this trend line. Okay, we attach it to the February 2nd high and then the July 27th high. You have to have your chart on BADJ. You have to adjust it for contract changes. Same thing on TOS charts, or else your charts will not look like mine. Okay, I get a lot of questions about that. So if we go to a smaller time frame, right, this area could act as resistance. I am looking at potentially taking a short there, especially if it lines up with my SMH entry. If we get an overall move to an area of resistance across different instruments, I will definitely put some risk behind the table. So right around 5165, so another 25 points or so on the S&P, it could see resistance there. Also, NASDAQ has a few trend lines to the upside as well. Okay, we get these by attaching it. We'll go to a 12-hour chart. So on one hand, you have from October 12th, 2023. Let me hide this one for a second. We have 1 test, 2 tests, 3 tests, 4 tests. Okay, that could be that 5th test could also act as resistance. And then again, the other one which is a little bit below there, we have it tied on to the low from August 18th, 2023, August 25th, 2023, and then it also hits the high from January 24th and February 12th. Okay, so that is about, less than 1% away, as well as the S&P. So if you have the NASDAQ hitting that trend line as well as the S&P hitting that trend line near the same time, or ideally at the same time, that could have a pretty good opportunity to short, as long as you have confirmation up there, right? If it freaking rips through, then I don't want to say blindly, but if it rips through like butter, like Swiss cheese, then it's probably going to have momentum to the upside, more. You want to see it fail there and then kind of put in a top and then get in. That's what I personally prefer. So that's bearish, right? It's coming up to an area of resistance. Apple, let's go over Apple. Apple 180 level, okay? Going on a daily chart. 180 has been very, very, very strong support. 1 test, 2 tests, 3 tests, 4 tests, right? Multiple tests there. For the first time since November, it closed below that 180 level, okay? Now, it's interesting because not only did it close below 180, but it also retested on Friday. Got all the way up to $180.53 before closing at $179.66. So if this stays below 180 on a daily close basis and it starts to kind of roll over, you gotta realize that Apple is the heaviest weighted name in the S&P, and I think the NASDAQ. I might be wrong on the NASDAQ, but definitely the S&P. So if the heaviest weighted name by market cap is lagging like Apple is relative to, say, Nvidia, Microsoft, Meta, and it continues lower, especially below a very important, that $180 level, that could put additional pressure on the indices as well. Okay, so definitely keep an eye on 180 and see if Apple, if that starts to reject like it did on Friday and it starts to roll over. Okay, that's also bearish. I'm going to go over a email. Now we're getting into the SMH thing. Okay, so this is what JP Morgan said on, I think, Friday or Saturday. The AI momentum train continued moving forward thanks to bullish results commentary from Salesforce and Dell. There were several notable headlines since the Friday close, including more fuel for the AI fire. SMCI is being added to the S&P 500, a development that followed the bullish AI earnings out of CRM and Dell, and it arrives ahead of another major AI catalyst in the form of AVGO, which is Broadcom earnings that occur on Thursday night. So that's going to be like the next big earnings going forward. So as they said, right, this is JP Morgan, the AI momentum train continues. In plain English, the higher NVIDIA goes and those types of names, that the whole semiconductor AI type of names, likely the market's going to go higher. And that's literally what we've been seeing, as I've been saying the last several videos that I've made. Okay? So I have an email from Zero Hedge. He's on YouTube. And you can see semi inflows have surged to the highest level on record over the last 2 weeks. The last time we saw a surge like that was late in 2021, just before there was weakness. So you can see that spike up in inflows. SMH is the semiconductor ETF, and so is SOX, SOXX. They're just different companies that have the ETFs. Excuse me. So we're seeing crazy inflows because of FOMO. Everyone sees the higher they go, and they have that fear of missing out, and they just jump into it at crazy levels in terms of, the valuation levels at these areas are getting less and less appealing. Yet you're still seeing retail buying and institutional too, as you know, because when the inflows are that high, it's not just retail. So that is, I thought that was interesting, right? And like I said, the last time we saw a surge like that was in 2021, just before there was weakness. Okay, tech funds on track for a record $99 billion of inflow in 2024. He said this cannot continue, right? And then you guys could pause for this. There's some other facts as well that similar to what I showed you guys in the last week's video. Okay, so I have not gotten into the SMH puts. I told you guys I was looking to. I just haven't pulled the trigger yet. Okay, some of the things that I am looking at in terms of to kind of gauge when is the right time are as follows. So CLAC, a lot of people don't know about CLAC. CLAC has a nice looking trend line, right? 1 test, 2 tests, 3 tests. It's about to test for the 4th time. Okay, you could see it's sitting right around 723, 724. Okay, what CLAC is, it's a KLA Corporation. They engage in the supply of process control and yield management solutions for the semiconductor industry. Okay, what does that mean? Your guess is as good as mine. But CLAC tends to lead the semiconductors. So essentially, if you start to see CLAC rolling over, it could be a nice sign that the weakness is about to follow in the individual semiconductors as well. One sec. Sorry, I have a crazy cough. So, if I see CLAC reject there and roll over, that could be an early sign of some weakness in the other names such as NVIDIA, Broadcom, SMCI, so on and so forth. Also, NVIDIA is coming up to all-time highs, which is interesting because NVIDIA has not broken all-time highs that were made on February 23rd, yet some of the other names like AMD have led. So considering the head honcho, the boss of the semiconductor sector is starting to lag, sorry, that could be a sign that the overall semiconductors are going to, start in their early stages of weakness. Could I be wrong? Yes. But I'm going to cut it there. I wasn't going to say much more. So look at KLAC, the trend line. If it fails there, that could be an early sign of getting into SMH puts. And I'll hop on here soon to go over more context. But that's it for me. I'm cutting it there. Peace.